All right, guys. Well, thank you for confirming before we've started speaking. But we have Antonio, CEO of dYdX here, and he'll be doing a workshop around the new dYdX BTC Perpetual. Antonio, you can take it from here.
Awesome. Thanks for the introduction. So, hey guys, I'm Antonio from dYdX. dYdX is one of the leading DeFi products for margin trading, borrowing, and lending on Ethereum right now. Today, I'm going to be going through a brand new product that is currently in alpha and will be launching to the public soon, the dYdX BTC Perpetual market. So just a little bit of background on dYdX. As I said, we're one of the biggest margin trading platforms on DeFi right now. We've done over $1 billion in loan originations in the past year and over $500 million of trading volume in the past year as well. So with this BTC Perpetual, basically what it is we're building a synthetic derivatives product that tracks the price of any asset. And kind of the first thing that we're launching with this protocol is a BTC perpetual market. Some of the advantages of trading with a BTC perpetual instead of just trading native BTC is that you can trade with much higher leverage, and it's just a generally way more efficient way to trade a product versus trading it directly on the spot market. So a little bit of background on kind of how perpetuals have evolved in centralized exchange world. They were first introduced by BitMEX a couple of years ago, and they've since proliferated a lot since then. So now they're available on Binance, FTX, Huobi, a bunch of other places. And one of the really interesting metrics that we've been tracking is a year ago, basically perpetuals have grown from about half the volume of the spot market to double the volume of the spot market in the past year. So perpetuals are basically the biggest way to trade Bitcoin and other crypto assets to this point, and are way more popular to trade as compared to just trading directly on the spot exchange. So one of the other reasons we're really excited about these perpetual markets is that you can trade anything, not just tokens that exist on top of Ethereum. And this is a really big deal because BTC is, as you probably all know, more than half of all crypto trading volume, but it doesn't really exist yet on DeFi in a really big way. So with these synthetic markets, you can immediately trade other assets like BTC with this synthetic product. Having these perpetuals should give us vastly superior liquidity to existing BTC on Ethereum alternatives. And also very excitingly, leverage is natively supported. So for those of you who aren't familiar with what leverage trading is, basically it's a way to multiply your gains or losses, as well as get short exposure to assets. So with leverage, say if you have like a 5x leverage position and the price goes up 10%, you would make 50%. So it's definitely not free. It also introduces a lot of risk. So in the same way you multiply your gains, you can use leverage to multiply your losses as well. So if you, say, took a 5x leverage position and the price went down 10%, you'd lose 50% of your capital. So definitely risks when you're trading with leverage, and you should know how it works before you start using it. So a little bit more about how this protocol that we built for perpetuals works. Basically, the way perpetuals work at a high level is that there's this thing called a funding rate, which is basically this interest rate that's paid between those who are long the perpetual and those who are short the perpetual. And this interest rate is basically used to keep the price of the asset tethered to the price of the underlying. So in this case, for the BTC perpetual, the price of the perpetual should be tethered to the price of BTC. And if it goes below the price of BTC, then basically there's continuous interest rate paid from shorts to longs, which basically incentivizes people to take the long side of the perpetual and makes people buy and will push the price of the asset back up to the price of BTC. Conversely, if the price is too high, then the longs will pay the shorts and making it more attractive to short and kind of pushing the price of the perpetual down to the price of BTC. Our perpetual product is collateralized by an Ethereum native asset. So in this case, we're going to be using a stablecoin. We've chosen to launch our first perpetual market with USDC as collateral. And this is basically, so the only thing that exists in the system is USDC, and you can kind of synthetically get exposure to another asset by just having that as your collateral. So as I mentioned, we built an entirely new protocol to support perpetuals. Our protocol, which we just released 2 weeks ago when we announced our alpha launch, is completely open source, has 100% test coverage, and we've also at the same time released an audit by OpenZeppelin where 0 security issues were found. And you can check this all out on our launch announcement. So without further ado, basically just wanted to go directly into the product for the Perpetual so it can give you all a sense of how that looks. So we'll just go through that really quickly, and then mostly want to spend most of the talk just kind of answering any questions you may have on the BTC Perpetual or anything else related to dYdX. Okay, so this is the product for the BTC Perpetual on dYdX. If you've used dYdX before, you can see it looks very similar to our margin product. Just to give you a sense of how that looks, this is our current margin product, and you can see this live right now by going to trade.dYdX.exchange. You won't have access to the Perpetual yet, as that's still in private alpha, but you can kind of follow along. Oh yes, good. Sorry, let me toggle off my video. So here's my full screen view here. So yeah, this is the, as I said, the current dYdX margin product. So as you can see here, you can go long or short by using leverage on our current margin product. So today we're going to be taking a look at the Perpetual product. And as you can see here, the first market that we've launched is a BTC USDC Perpetual. Looks very similar to the margin product. You can see here there's an order book of people that are willing to buy or sell the contract. You can see basically the kind of the 24-hour trade history here. And then here on the left sidebar, you can see a way that you can actually go long or short on this product. So here we're going to see that I've deposited a little bit of USDC here that I can use as this collateral for the equity that I'm going to be using to trade on the Perpetual. So let's try to open up a long position here. So you can see here that I can put in the amount of BTC I'd like to go long or short. Buy is just going long and sell is just going short. So here I'm going to go long. You can see the price that I will be able to trade at here. And this is just determined by what price people are willing to sell at this particular moment. You can see a lot of statistics on the position that will be opened here and decide whether or not you want to open this position. So I'm going to go ahead and do that right now. So what's happening now, this is off screen, but basically I'm just signing a message here in MetaMask, indicating the trade that I want to make. And it's a similar idea if you're at all familiar with kind of how 0x orders work. In that there's an signed off-chain message that's eventually presented to the smart contract on the blockchain, which knows how to verify the signature and can just execute the trade. So one thing that's a little bit unique about dYdX is that we run our own centralized matching model. And this basically means that you have immediate trade finality when you're trading on dYdX. So after this, you don't really have to wait for the transaction to be mined to know whether or not this trade will go through, or you don't have to wait for the transaction to be mined to know what price you're getting. Just immediately when it hits our servers, you'll know what price you're getting, and the order will fill at that price. So here you can see this fill here. I just placed this buy order, and you can see the transaction. So this is just on Etherscan as to how this was mined on the blockchain. So now you can see I have this long BTC position open. My leverage here is a pretty low 1.78x, and our maximum leverage that we support on dYdX for the BTC Perpetual initially will be 10x leverage long or short. You can see a couple different statistics on your position here. So the most important of which is this funding rate right here. And this funding rate is this interest rate that I was discussing before, which basically keeps the price tethered to the price of underlying Bitcoin. You can see here that I am currently paying this 0.0076%, and that's an 8-hour rate. Funding on dYdX is paid continuously, but denominated in an 8-hour rate. So I'm paying money basically because it's more popular to long than short right now. So I have to basically pay to keep this position open. While I have this position open, I can do pretty much whatever I want with it. You can keep it open indefinitely, and you can add to it. You can remove the size from it. So say I'm doing pretty well, and I want to add an additional 0.01 BTC to my position here. You can see that this is going to increase my leverage here, increase my notional value, and it's also going to increase my liquidation price. And what liquidation is, if you're not familiar with this concept, is basically if the price of the asset goes below this value here, then I will be liquidated and effectively lose all of my money. So you definitely don't want to have that happen. And the higher leverage you're trading with basically informs how close or far away your liquidation price will be. So let's say here I want to add an additional 0.01 BTC to my position here. So I'll place this order. Now I'm just signing in MetaMask. Once I finish signing in MetaMask, you can see I have this additional order here, and it has been filled. So since I was buying, it was basically hitting this first sell order here for whoever this is that's willing to sell me this position. And then this fill here, you can see my previous one was confirmed, and now this fill here is pending in this blockchain transaction right here. So you can see all the pending states for how my position is going to be modified once this fill transaction confirms. And after that confirms, I'll basically have this 0.02 BTC position opened with 3.63 leverage. And as I said, you can keep that position open as long as you want. Right now, this is very much an alpha stage product. So we don't have all of the statistics that we would like to show. But we will be adding things like P&L, so that's your profit and loss on your position, kind of the average open price of your position, the amount of funding you've paid or received. Those will all be available very soon. So now I have this position opened. You can see here, first of all, let's just go through the different order types that are available on dYdX. So I've opened this position and then increased its size by using a market order. Basically what a market order is, very similar to any other exchange. You just take whatever price is currently on the order book right now, and you trade at that price. Conversely, a limit order, you can basically say, I want to enter into a position at a certain price. So say I want to, if the price of BTC falls a little bit lower, I want to increase the size of my position. So I could place 0.01 BTC buy here at, say, like 8,800. So if we place this limit order here, you can also see, let me just highlight this, fees on dYdX. So dYdX, as of about a month ago, does in fact charge trading fees. But on the Perpetual, there is actually a fee rebate when you make a maker order. So if you make an order that does not immediately fill, you will in fact receive fees rather than paying them on dYdX. This is basically just to incentivize people to put liquidity on the books and incentivize the books to be thicker. Let me just place this limit order here, again, signing it in MetaMask. And then once I've signed it, you can see immediately it shows up on the order book here. So very fast matching engine. All this goes through basically at the speed of what any normal centralized exchange would be able to offer. And now you can see here, if the price falls below 8,800, this order will be filled and the size of my position will increase. And then the final type of order we offer on dYdX is a stop order. So say I'm worried about the price going down and I want to close my position so I don't lose too much money. So I can basically, since the size of my position here is 0.02 BTC, I can place a 0.02 BTC stop order. And then I can say whatever price I want this stop order to execute at. So say if the price goes below 8,900, let's try 8,800. So 8,800, then basically this order will be executed. You can see like this price right now is below the mid-market price. So the current price that this asset is trading at is 8,900 and a bit. So the sell order would kind of be like down here somewhere in the order book. But basically, because we have on the protocol level enforced that this order cannot execute unless, the price goes below a certain threshold, then this order like deterministically will not execute unless the price goes below that. So I can place this stop order, again, just signing it in MetaMask, and then I'll have this stop order open. And you can see that on your orders tab, where if the price goes below this, then the order will be immediately executed and my position will be closed. So those are just the 3 different types of orders that are available on dYdX right now. And these are things that are widely available on any other centralized exchanges. But you can see the experience of trading on dYdX is very similar to trading on a centralized exchange. That's basically what we're going for. We want to make our product, feel like you're trading on any other normal product that you might be using. And kind of the main difference here is just that you kind of have full control over the positions that you're entering into. You're signing everything in MetaMask, and all of that is obviously enforced by our contracts that are running on the blockchain. So final thing here before we go to questions, just if I want to close my position, you can see here that'll pop up this close modal. I can close any amount of my position less than or equal to the position size. So here I'm just going to close my entire position, click close, again, sign in MetaMask. Basically, anytime you do a state changing action on dYdX, you'll just be signing something on MetaMask. One important point there is you're signing things, you're not sending transactions to the blockchain. So that means you don't have to pay gas fees when you're trading on dYdX, which is a really attractive option. You basically will only have to pay trading fees or receive maker rebates based on if you're taking liquidity or providing liquidity. So you can see here, my order has already gone through and is confirmed. So now my position is closed. You can see a little bit more in the history, what exactly happened with my perpetual. I'll let you check that out a little bit more by yourself, but that's basically the entire product. Can see here, right now we're in pretty early stages of alpha, but you can see here the liquidity on this product is already quite good. And I would definitely say it's better than existing DeFi BTC options. So we have, about 180K of USD volume on either side of within 1% on either side of the book, which is pretty good. And also want to emphasize that we're working with market makers, and this should be ramped up to about $1 million in volume on either side of the book within a couple weeks. So it should be by far the most liquid product for trading BTC in DeFi, and we're excited for people to start using it. So that's basically all I have for now. Mostly just wanted to answer any questions you may have on the dYdX BTC Perpetual or anything else related to dYdX. So I'll turn it over to you guys. Feel free to ask any questions in the chat, and I will do my best to answer them. Okay, maybe while we're waiting for questions, and feel free to throw those out at any time, I'll just go through some of our... Oh, sorry,
so Antonio, one quick thing. You can check the bottom, ask a question. There's 5 questions, I believe.
Oh, okay, nice, excellent. Okay, let me read some of these questions. Can you query open, so first question, can you query open orders using, say, Dune Analytics? So right now you cannot query open orders using traditional blockchain analytics projects. And the reason for this is because the entire order book on dYdX is off-chain. So it only exists on our servers. We do have a full API where you can query all of the open orders, have a WebSocket as well, have both Python and TypeScript clients for integrating directly with our trading engine. So that's how you would basically see what the open orders are and would interact with them. Yes, so next question, can you elaborate more on how the funding rate is determined? So this is a great question. It's a little bit complicated. We have full documentation for this on our docs page, so would encourage you to check that out more if you're interested in diving deeper. So this is docs.dydx.exchange. But at a high level, basically how it works is once a minute, one of our backend services will snapshot kind of the current state of the order book, and we'll look at something called the impact price. So it'll basically say, what's the price to buy 1 Bitcoin and what's the price to sell 1 Bitcoin on dYdX? And then if those prices are within the bounds of what the current index price is, and I'll talk a little bit more about how the index price is determined in just a second. So if it's within those bounds, then basically there's no funding rate. If it's too high or too low, then basically it'll put in what's called a premium. And then those premiums are summed up and eventually submitted once an hour to the blockchain, which will update the funding rate directly on the contracts. The index price that we use for the dYdX BTC Perpetual, and this is very similar to an Oracle price, is basically the MakerDAO V2 BTC Oracle. And this Oracle is comprised of 5 different centralized exchanges currently. I forget all of them off the top of my head, but it's like Coinbase, Gemini, and a couple of other of the most widely traded and widely used BTC USD markets. And then this Oracle price is basically reported by a network of reporters and is pushed up to the blockchain. So we don't even have control over what the Oracle price is, and that's by design because we want this to be decentralized. Okay. Okay, next question. How can a new synthetic be included? Is it permissionless? Do we have to use some oracles? So right now it is not permissionless. However, what I would say is all of our contracts are open source under the Apache license, so anybody can deploy their own perpetual. On dYdX, kind of our MO so far has been focusing on a smaller amount of markets and then providing really high amounts of liquidity on those markets and providing an excellent trading experience for those markets. And that's the reason why we're focusing on just this one perpetual, the BTC USD Perpetual for now. But we do plan to add others in the future. Not exactly sure what we're going to be adding yet, probably Ethereum, maybe DAI, with other collateral assets as well. Do we plan to decentralize the order book and matching it? Right now, we don't have any plans to decentralize the order book and matching. So we trade off a little bit of decentralization for a far superior, at least in my opinion, product experience. So basically what you get by having this centralized matching model is you get an experience that's literally pretty much exactly the same as trading on a centralized exchange. So no front running, slippage at the time of just hitting the backend servers, immediate trade finality. And these are all things that allow us to have far superior liquidity to what's available on other decentralized exchanges. This has worked really well for us on the margin trading product to this point. And it's one of the reasons why dYdX is now the #1 by volume over the past couple months decentralized exchange for those assets. Cool. Just reading a couple more of these questions. Okay, this is a great question. Would there be a need for perpetuals if projects like TBTC gain traction? So I would definitely say unequivocally that there are a need for perpetuals, even if like the underlying assets become available on the Ethereum chain. And I would point as evidence just back to the centralized exchange market. So any centralized exchange is trading Bitcoin, right? And now there are a couple of these centralized exchanges that are trading these BTC Perpetual products. And as I mentioned, these perpetual products are trading at double the volume of the entire underlying spot market for BTC. So it's pretty clear that the market has shown that they prefer to trade these perpetual products over trading the underlying assets themselves. So definitely want to stress that the reason we built this isn't because there's not any amazing BTC options available on Ethereum right now. The reason we built this is because perpetuals are a better way to trade some of these assets than trading the actual underlying thing itself. So we're really excited about having this as the first perpetual in DeFi, and really think the volume are going to go well. What are the taker fees? So taker fees are 7.5 bips on the taker side, and then 2.5 bips of a maker rebate. Any plans to settle against TBTC? No, this wouldn't be settled against TBTC. We're probably just going to keep using stablecoins as collateral for now. USDC, certainly the first one. And then we're looking at some other stablecoin assets we may use as collateral in the future. Okay, let me just read this question. Is there a public launch timeline? And further on that note, what features are you focusing on after the public launch? So yes, the public launch will probably be in a few weeks from now. We haven't exactly said at this point. We're basically just seeing how the alphas are working and are kind of slowly scaling up liquidity, slowly increasing position sizes, and just making sure everything is bug-free and stable before we get to the public launch. But yes, it will be publicly available very soon. One thing I definitely want to stress is that this product is only available to non-US users and is not available in the US at this time. Let's see if there's any other questions. Yes, good question. Okay, why USDC instead of DAI? So we made this decision. This is kind of a decision we made for now because USDC is a lot more stable than DAI. So you guys have probably all seen that DAI is trading at $1.02 for the past couple months, and that's really harmful if you're trading products on margin if you don't know what the value of your collateral is. So we've seen that DAI is not stable enough for these very highly leveraged products at this point, and that's one of the reasons we chose USDC. Another reason we chose USDC is because it's much more widely used in the centralized exchange market. One of the things we're going to be going after at dYdX is trying to introduce a lot of new people from trading on just centralized exchanges to trading on decentralized exchanges. We think we're really well positioned to do this because the dYdX product operates, as I've been saying, very similarly to a centralized exchange. It feels like you have immediate trade finality. The only Ethereum native thing you have to have is your own wallet. But besides that, it's a very similar experience to trading on centralized exchanges. So we want to have assets that people are using on centralized exchanges. And that's one of the reasons why we chose USDC at this time. Cannot give too much advice on tax treatments for perpetuals and synthetics, but would encourage you to look more into that yourself. Good question, though. Okay, here's another good question. Can you comment on scalability considerations as it relates to the matching engine architecture? So just a little bit more detail on how our matching engine works. So as I've been saying, we run a centralized matching engine at dYdX. And this operates, pretty much as fast as any other centralized exchange matching engine can operate. So, low millisecond latencies before the things are processed by the matching engine. So the scalability of the actual matching engine is quite high. And you can see that by, people are always placing and canceling orders. If we look at the order book on one of our more mature products, so our, ETH DY like market right here, you can see orders are being placed and canceled all the time. And market makers are, have bots up and running that are placing and canceling these orders very fast. So the actual backend architecture is quite scalable. The only thing that is, scalable at the rate of Ethereum is settlements. So the only time we have to actually send a transaction to the blockchain is when trades are matched against each other. This is a relatively significant expense for us. So we've been covering the gas fees for this for our users. And this is one of the reasons why we decided to start charging trading fees. However, the amount we're paying on this is much less than the amount we're actually making on fees right now. So it certainly makes sense for us at this point. Obviously, if we want to scale to the level of, centralized exchanges, we'll have to tackle scalability at some point, but it hasn't been a huge problem for us to this point. That being said, we are doing a number of research into different scalability solutions. So things like, zero knowledge rollups, optimistic rollups, other chains, are open to all of these things. And we would be an early adopter of whatever some of the best scalability solutions are looking like.
All right, Antonio, I think we can take one last question, and then we need to switch to the next session.
Okay, sounds great. Thanks for all these questions, everyone, by the way. I think that's it, actually. I think we've kind of gone through all the different questions here. So thanks, everyone, for your excellent questions. And if you'd like to learn more about the dYdX BTC Perpetual, just head over to our website, dYdX.exchange, and you can check out all of the information about the Perpetual there. Join our Telegram. Happy to answer any follow-up questions you may have there. But thanks so much for having me.
Thank you.